Hi, and thanks for watching. In this video, I want to do a quick analysis of the company Duolingo. So we've got the chart up here, ticker symbol DUOL. And what I want to do is just share some thoughts about when I would potentially make an entry into this stock. So we're going to look at the charts and study them on a few different time frames and use some basic indicators and kind of see if now or if waiting might be a better opportunity to enter this stock. So my name is Tyler Stokes from StokesTrades.com. I've got a school group, and within this school group, I have a section on a trading challenge, and I've been outlining all the trades that I've taken since April 2025. So if I decide to take this trade, I'm going to talk about why I might take this trade. And then if I do eventually take it, I'll record it here in the group. So you can come and join the group. You can find a link below in the notes below this video. Okay, so Duolingo, I came across this stock on X. I saw some posts. This one in particular is saying that Duolingo is to education now what Amazon was to e-commerce 20 years ago. So that's a big statement from a pretty big account. And that was made on June 9th. So I think a lot of people, may have bought the stock on June 9th. And if we just go to the daily chart and we see what that stock was, June 9th, I got it right there. We were at, we opened at 509 and closed at 497. So right around $500. So unfortunately, what I think a lot of retail traders do, what they do is they tend to buy the all-time high and they chase. So you can see that if we look at the monthly chart here, it's a bullish chart. Back in 2023, sort of the beginning of 2023, we've got a big bullish engulfing candle here, sort of a morning star type of framework there, which is very bullish. And then from there, we've just made higher highs and higher lows and sort of just melted up to the right. So very bullish chart, but is now a great opportunity. We've got an all-time high here. Is now a great opportunity. We want to see that and look at some indicators first. So if we throw on just the Ichimoku cloud, we can see that, Ichimoku cloud allows you to kind of see in one look if this chart is bullish, and it is on the monthly chart. So we are above all the indicators. The blue line is the conversion line, baseline is the yellow line here. We are above that. We are above the cloud here. And then this particular one, the black line, the price is below that. So that's another positive. So all the indicators for the Ichimoku cloud is positive on the monthly. And if we jump to the weekly, then we can see that it is also bullish and positive. We are above both the conversion and the baseline. Price here is below the black line, and then the future cloud is green and we are above it. So in one look, this is a bullish chart. However, if we jump to the daily chart, we can see that we're starting to lose a little bit of momentum here from, this peak here in the 540s and down to, around the 500. We've had a couple days where we're struggling to close above the conversion line, and there we closed below it on Friday, June 6th. And then we opened on Monday, June 9th below it and wick down here to the baseline. And then the next day we're below now the baseline and the conversion line. And if we jump to the 4-hour chart, we can see that we are starting to lose a little bit of momentum. We lost the 100 period moving average. And then again, we are below some of the indicators on the Ichimoku cloud. So here on a shorter time frame, the Ichimoku cloud, is not quite bullish. We might need to retrace and do a back test. So with certain stocks, when they melt up really quickly, we jump to the weekly chart here, we're positive, we're here, we're going up. If things get overextended too much, then they tend to come crashing down. So it's healthy for a bullish engulfing candle here, which we saw, these two big green candles. It's healthy to have a natural back test so we can back test a level of support and then continue higher on. If this just kept melting up, then, there's a chance that, you buy at the all-time high, which many retail traders do, and then it comes crashing back down, a mean reversion or crashing back down to a level of support to continue higher in the future. But many people potentially will buy here in the 500s and, it's retraced back and then they panic sell and they lose money. So a lot of retail traders do that. So here on the 4-hour chart, if we kind of look, maybe we're going to do a breakout of the 200. So this purple line here, this dark line, is the 200 period moving average. So we broke out and we might, want to do a back test and come and back test this area of support. So these are 4-hour candles. So, in the future, if we continue to trickle down here, right around 445, 430, 450, right in this zone might be where we come back and backtest this 200 period moving average. And here, we're Tuesday morning pre-market here. We can kind of see if we have some 4-hour candles that come up and meet this conversion line and just don't break through this and flip this to support and continue down, then it's likely, not likely, but there's a probability that it might come down and retest this support. So we're talking 230 to 250 zone. So that might be a good entry. Now we want to see if there's any confluence that entry on some other charts and indicators could be also another area of support. So if we jump back over here, we're on the weekly chart. And if we pull up a fib level, let's see if there's any indication showing that there is some support in that zone. So we want to go from the high here. We're going to get our fib retracement tool, and we'll go from the high and we'll go down to this low. And we can see if we zoom in here, what do we see right around the 435 level is the 1.618 fib. So there is a probability that this comes back and maybe it wants to test this area of support, 435, similar kind of range that we thought that we might be in here when we touched the 200 period moving average on the 4-hour chart. So there we've got some confluence now that maybe this area, this zone could be a zone of a back test, could be a zone where that's a support area, and we can continue higher on there. So you certainly don't want to come in here, buy the all-time high here. We want to wait for a better entry. It would be healthy for it to come back, retest this fib perhaps, and then we can make an entry here. Now, we wouldn't want to make a full entry because there's a chance that, it might retrace back and maybe hit this level, but maybe that level doesn't hold as support. So we make a smaller entry here, knowing that maybe it needs to retrace back to further levels of support as well. So there's not always going to touch support and take right off. You might want to make an entry here, but be prepared to also maybe make an entry a little lower if it retraces to maybe the Ichimoku cloud, some of the other indicators here, or further down to another fib level. So that would be, I think the first target area would be maybe 435, 440 type of zone. Now we want to see, maybe there's one more indicator that we can look at that shows other confluence areas, and we can pull up a Gann square for this chart as well. And if we kind of zoom out, we can see that this particular Gann square was taken from the low. And basically what the Gann square does is allows you to see some areas of support and resistance with some of these angles, arcs, and horizontal lines. So we can see here price ran up to this orange horizontal line, was met as resistance, fell down to some of these angles, and you can see that this stock has some good market symmetry. It's riding this angle up, it meets these arcs as resistance, breaks through to the next level, and here it sort of just can't get by this horizontal level, so it breaks back down. And this was August 5th 24, where we had a bit of a crash in the stock market, back tested some of these arcs, and then made its way back up to this green level. So now when things break through levels, it's often very bullish for them to come back eventually and just do a back test. So it might want to back test some of these arcs and levels. And if we zoom in here, right here, if this week or the next week we come back down, here's 445, 444. And then if it came all the way back down to the horizontal line on the Gann chart, that would be 415. So we're looking like 445, 435, 415. These could be good areas for support and a back test. So the Gann arc there, the fib level at 435, and then further down here, we've got the Gann line there. So that is particularly where I would maybe continue to watch this stock and see if this 435, 440 kind of zone, 445, is a good entry point. And in the coming 4-hour candles, maybe the coming days or weeks, we can see if it comes and hits the 200 average and see where that lines up with the other charts. So there's just a quick analysis of this particular chart. Things are positive. It's a bullish chart, but when you see news, posts like that, and you go and you buy right here, many retail traders, they don't look at the charts and they don't understand that maybe this wants to retrace to a support level. They buy the all-time high, and then it retraces back, and they panic sell. And if you kind of were to buy the all-time high there, and say we eventually do come back to the 435, it's almost a 20% drop. And unfortunately, a lot of people panic sell that, and it's just not something that's good to do. Don't buy the breakout, don't buy the all-time high. Wait for a back test of support to make an entry. It's positive, it's bullish for the chart, and it's going to be better for your entries with some of your trades. So I hope that you found that useful. Below, you can find some links to our school group, and you can find more information on the strategy that I am using for the trading challenge that I've been using in that school group. So thanks so much, and I will see you in the next video.